Hi, everyone. I see some familiar faces here, so it's good to come, first of all, to this type of events. I think I'm probably the younger here to talk in the stage. Our industry that we are operating, which is prop firms, is also very young, so I did not had too many failures, I would say, in this industry. Any failure you can have is can lead to a company to collapse. And we had some histories that I will share about companies that collapse in the prop firm space. Just before we go into specific stories that I will explain and try to dissect what really happened to these companies, I will start to introduce a little bit myself on the background. Before I joined the prop firm space, I was not aware about fintech and CFD brokerage and all this industry. I was coming from an institutional background. I was a trader trading in a traditional prop desk in an option desk. So it was it's a complex instrument to trade in the market. There was actually one event that I will remember that happened in a desk. It was 5 years ago now when we were trading oil in options, and there was a dispute between Saudi Arabia and Russia when they cut the basically they did not arrive to a deal to cut the production of oil, and the oil drops 25% in the weekend. Traders from the desk had short position in options, which means you are unlimited exposed to the market. And I remember the desk had to wake up 2 a.m. in the morning on a Monday morning, come at the desk and try to close positions. The fact is, when the option is out of the money, so you basically have no liquidity, you see the P&L of the desk jumping from minus 5 million to minus 10 million, and you cannot basically close the position of the desk. I was still a junior trader at that time, so I had no position. But in any industry, there can be a black swan event that can put you out in the market in 1 second. In prop firms, I would say it's slightly different. We had a Metacrots shut down during the last 2 years. I don't think it was the main reason why prop firm failed. Mainly the failure was because of the decision that companies were taking inside. Instead of being prepared to this type of event, they continue. They did not basically think about the risk or hedge themselves in a proper way, and shut down not because of the black swan event, but shut down based on decisions. I will also talk about a failure I had actually, and it was in the fivers back in the day when we tried to innovate on a specific product. It was still very early. We were actually exposed to one single trader to try to hedge him in the market. I'm a trader in the blue, and instead of hedging the exposure of the company, so you look at the chart and try to trade the market. So basically, you double the exposure because you try to analyze the market rather than hedging and using the risk management of the company. So that was a mistake. You need to be sure which hat you have. Either you are a trader and then you trade the market properly. Either you are a risk manager and then you need to manage the risk of the company. So today I took a decision to not trade the market. I'm managing risk of big prop firms here in the CFD side. So that was one of a very intense 2 weeks of hedging one unique client in the market after we did a small mistake in the parameters of the challenge that we created. Let's talk now about the reasons why prop firms are not. What are the main mistakes prop firms are doing? The first, and I also said it yesterday in a different panel, risk management is the first one. Risk management is really wide subject. When we say risk management in prop firms, no one knows what what it really is, but we can basically split it in three different areas. The first is the way you set the challenge. So the way you set the challenge will already set the odds of the prop firm to be successful. It starts from here. There are some companies that after they launch, you know it's going to be a failure because they did not understand the benchmarks. They just throw something that is not long-term sustainable. So the first is understanding the challenge that you provide to the traders. The second is the lack of data understanding. Today, because the industry is so new, you don't have any benchmarks. There are no standard practices in the prop firm side. So when you enter, you don't know which type of data you're going to get. And companies make time to understand the data they get to be able, to prepare themselves to any events that can put them in danger. Then the last things in risk management is, for me, the main one is the toxic flow and abusers that came into this type of product, where the main goal here is to detect between a discretionary approach of the trading, which is a trader that is trading on a specific trigger in the real market. We will analyze the market on specific signals, and someone that is here to play on a systematic approach to play the odds of the challenge. So you have, on one side, you have a real trader that tries to trade the market, and on the other side, you have someone that is a mathematician or a statistical guy to play with the odds of the challenge. And today, this is the main common ground where prop firms are fighting to try to detect between a proper trader and someone that is trying to come from a mathematician angle and try to play with the odds of the challenge. So risk management is the main reason why prop firms are failing, and we had a lot of cases in the last 2 years in prop when many shutting down. The second thing is a little bit more about managing a company, but it's undercapitalization. The barrier of entry in prop is really low, so companies that want to enter the space, they are entering without any resources, and then 6 months later, they don't have any cash to continue their operations. That's the second reason. The third reason is the lack of experience. And I think most of the companies in the prop firm industry, they had a good instinct and intuition to do good in the space, but because of the lack of experience, they just failed, just because they did not connect with people that were in this type of situation before and could get any insight from the inside. So that also a common mistake when you start alone without any proper assistance, and then 1 year later you need to adjust everything and start again. The last thing in prop firm is the A-book fantasy. I call it the A-book fantasy because you had many prop firms that try to say we are A-booking or try to say we are fully A-book. This is a complete failure. The risk in prop is really asymmetric, and that's something I learned along the way. You have a trader that will pay for a specific challenge, but when he comes to a funded stage, he is exposed 10 times more. So it's really hard to go into a book model in prop firms. There are a lot of firms that decide to A-book from zero, and there are also some big names in the space that did these mistakes at the beginning. I'm sure we're going to have a more mature space to be able to hedge specific groups of traders in the market, but that was the main mistakes firms did. Maybe I think that's mainly most of the mistakes prop firms did. I'm still young, so I probably will face failure in the next decade in the industry. So maybe next time I will have other different types of failure I can talk about myself. But that's mainly it from me. Thank you for listening to me. Thank you.